I just want to show you the example of breakout and retest kind of trade setup. I'm looking at, let's maximize this. I'm looking at the NQ. Since the morning, there are a lot of very good solid liquidity, and I can see the liquidity here. It was almost like from my time, central time, from 1 o'clock, almost like 1 o'clock it was there. Finally, it was broken around 1:50, around 2 p.m. And then once it was broken, prices went down, and then came back and retested. That's why I took that particular trade in terms of anytime the price goes back and retested that particular same place where it was broken, it's a very good place to enter. But you need to make sure, wait for the swing, pick your swing, and then you'll be able to hold your trade. So at this point, I'm just being patient in terms of what's gonna happen to the trade. I have my stop right above the zone as well, the zone that printed by the system. So let's see how the trade is going to turn out. For me, initial hurdle is to make sure the price is moves further away from my entry, so that I can move my stop into safer at break even. So let's be patient and see. Again, this is not one of the confidence is that I got a signal also in the supply and demand system. Also, I can see the same price line where we got the like 12 19 254 19 254. It's the same price where the previous strongest liquidity demand was broken. That's why I took that trade. And then once I took the trade, my challenge is to make sure I have my stop at the right place. It's not based on how much I want to risk. The reason is that stop always should go where the stop should go, irrespective of where you enter the trade. If you enter the trade a little bit late, because of that, you're going to have like a tight stop. You're going to get stopped out. You can see it doesn't matter where it is, the price pulls back and then very close to the swing. If I don't have my stop right here, then I would have got stopped out much earlier itself. So this is why stop needs to go where the stop needs to go. Again, my point is I'm looking at liquidity zone, price broke, moved, and then came back and retested the same place. That's when I took the trade. So now I'm kind of managing. Since it's like showing the reaction in the same place, I'm going to move. I might move my target right here because it's forming a rectangle. Because you can see it's forming a rectangle. It might break and go down, or it just keep on bouncing those areas. The reason is, if you can see, that happened all day today. Okay, let me show. Look at here. That happened all day today in terms of it picks a range, it stayed in the range. It picks a range, stayed in the range. Market is like repeating the behavior of picking the range and then staying in the range until it breaks out. Even look at this particular range. It stayed there for such a long time. So again, if you are in the market, this goes back to that particular range, you have to be a little bit patient or move your target. I'm moving so fast. Okay, let me move back. Go back here where my trade is. I have my stop right here. I can still move my target right here because my market is bouncing back and forth in the range, so I can still close the trade a little bit closer. But in this case, I'm expecting it to break it down. Okay, why? I got the confirmation on the ES side. The supply is forming right here. Same place, swing and pullback, supply is forming. You can see that right there. Supply is forming here, and even here. Look at NQ. The supply is forming right there. So I think most likely the prices could move further down. So supply and demand system is going to give you the confirmation for the entry, but trade management and then the direction of the trade, everything is based on the actual order flow. How the order flow happening in the market right now. And then also my trade is always, if it is breakout and retest, That way I can enter in confidence. After I enter the trade, I can we can see right now the supply is forming on the ES, supply is forming on the NQ. That means this place, what is this? The place I have stopped is little bit good safe. Now what I'm going to do, I think whether you can see or not, I'm going to move my stop a little bit above the liquidity just to be safe. I know it's additional risk, but it's important you don't get stopped out, right? So you don't want to get stopped out and then moves to the target after you are out of the trade. That's very frustrating. So I know more risk is not good, but if you take the trade a little bit late away from the ideal place, again, stop needs to go where the stop needs to go. 1, 2, 3 bounces, D0, D1, D2, 3 retested. So that means I can still close it here because there's a chance that there will be D3 forming to bounce up. But I'm hoping it will break it down because the supply is forming here, right, guys? Supply is forming right here. I'm expecting to break it down. Price could move down. So at this point, I don't want to lose anything. So I just wanted to move to break even. So let's move to break even and then hoping. If it is the morning time, I would not move to break even this early because market can still go back up and then retest the same place and come back down. Can shuffle back and forth here. But now a little bit close to the end of the day, it's at 2 p.m. just 15 minutes to market close. I just want a scalp, just a scalp, few points, and then just close the day. So not good, right? So all right, so I'm a little bit greedy. If it broke out already, right? It broke out already, so I'm just wanted to tighten my stop right here so that like if it reverses, it reverses. But you know what, I'm going to exit my trade. I'm done. I got to go home.
Order canceled.
It's good because I wanted to show you in terms of how to enter the. This is $300. Actually, it's 275 something. Still, it's good money. So again, the trade I entered on the breakout and retested, and then I can see the liquidity zone forming. That's a good confirmation. And then it's ranging out. And then make sure you have the stop where the stop needs to go. It's not based on where you enter. Don't have fixed stops. Please don't have a fixed stops. That's it for today. Just another $300 trade. It's good to show you the setups. Setups are very much important. If you are watching this trade, this is July 24th, 2 p.m. Central Time. I expect the market to go down. I'm going to stop the video right now, but please watch this market. Later it's going to go further. Why? Look at this. There are no demands here. There are no demands here on the NQ. Just supply. Look at this. Strong supply. So tell me what happened later. Have a good day, guys. Thank you so much.